Good afternoon, everyone. I'm very happy to welcome you to our, in my opinion, extremely interesting webinar, where we cover lots of important matters that concern everyone. Because, when you are living in any country, definitely there is one thing for sure, and one thing for sure is that you are paying taxes. And that's why, surprisingly, or to be honest, not surprisingly, when we announced the topic of our webinar, we saw huge interest from all the participants. And I'm very happy that you managed to join. Welcome. I will be very grateful if you can put plus, or if you can write where are you listening from, which city are you in, why you came here, and this way we will also start, okay, UK. Well, it's actually quite logical, because today, what are we covering? We're actually covering UK or Cyprus non-dom tax regime. And today, we will discuss with you very interesting topics. First of all, and I'm very happy that we have experts who will be covering this topic, which is end of the resident but not domiciled tax regime in the United Kingdom, resident but not domiciled tax regime in Cyprus. Very fascinating thing that not everyone knows about is the tax residency in Cyprus, 183-day rule or 60-day rule. And of course, we will cover with you some property investment example. And I can see that we have lots of people, both from UK and from Cyprus. And first of all, let me introduce myself and our esteemed speakers. My name is Anastasia Yianni, and I'm the CEO and partner of Cyprus Sotheby's International Realty. I've been working in real estate for over 24 years. Actually, every year this figure is growing, but it's an amazing experience, and I really love this part. From our company, I am accompanied by Christoph Molitor, our property expert. He is a trusted consulting, investing, and real estate professional. He speaks so many languages that you can speak German, French, English to him, but most importantly, he knows the Cyprus market really, really well. Sotheby's International Realty is probably the largest international luxury real estate brokerage network in the world, with offices in 83 countries. And I think that the most important part of this introduction is that we do understand that our clients come from all over the world, and we can compare the benefits of Cyprus compared to the home country, or maybe in sometimes Cyprus is not the best property, not the best option. We work all over Cyprus, fully licensed, multilingual, and we are here to serve you to find the best property on the island should you wish to move to Cyprus. And I'm extremely excited and very grateful to our partners of today's webinar, KENDRIS. KENDRIS is an international advisory and fiduciary services firm for wealthy individuals, family offices, corporations, and institutional clients. And today we are joined by, first of all, by the partner and the co-founder of KENDRIS Cyprus, Sara Gunnervik. Sara, would you like to make a small introduction of your company?
I would love to. Thank you very much, Anastasia. First of all, you can see also my contact details there if you need them in the future. So Anastasia said in the previous slide that KENDRIS is an international advisory and fiduciary services firm for wealthy individuals, family offices, corporations, and institutional clients. What does that actually mean? What do we actually do in KENDRIS? We help international wealthy individuals and family offices and corporations to structure and hold and manage their international assets. Wealthy individuals, many of them do not live in one country anymore. Life has changed. We don't live in one country. We don't have family members only in one country. We don't also only hold assets in one country. And this kind of international lifestyle that high net worth individuals usually have comes with certain needs. And KENDRIS is there to help you with those needs. What we do is that we structure your international assets and help you to manage them and report them and help them to become tax compliant and execute all matters that the family might need on the international assets and family members that they have. So you might have family members living in different countries, children in different countries. Someone go to university, they stay there, they go to university, while the parents live elsewhere. And you need to sort yourself out for efficient tax management, for efficient international reporting, and for succession planning in all of those countries where you have people and assets. KENDRIS is, we have 700 clients, 700 ultra high net worth families, individuals from 57 countries. So just as Anastasia, we understand that the world is much, much, much larger than just Cyprus. And we understand the background of those clients and the needs of such clients, international clients. We are 210 specialists working in KENDRIS. And we are more than 30 different nationalities. 40 of those specialists sits actually in Cyprus. Then I will do this. We are very proud of our DNA, KENDRIS DNA. We are a management-owned firm. We are not owned by any bank or any other person with specific interests. We are also very proud of our Swiss DNA. We are a Swiss company with Swiss roots and a Swiss long history. We promote our Swissness a lot. And we are deliberately excluding providing asset management services because we focus on wealth structuring, asset consolidation, controlling reporting, and governance. That's what we do. We do not do portfolio management and handle your money. We have a long history. You see there 110 years. But it doesn't mean that we also look very closely to the future, and we are a company that look for digital solutions and provide digital reporting to our clients. We have 3 segments that we support: private clients, which is what we're talking about now, and what we're going to talk about today, relocation and international management of assets. We also serve corporate client, CFO services, and we also serve institutional clients with funds, Cyprus and Luxembourg funds, family funds, or alternative investment funds. Then let's see, can I go for the next one? Yes. We have offices in Switzerland, UK, Cyprus, Luxembourg, Dubai in the IFC, and in Singapore and in the US. Then I very, very proudly present David Knight, who is our Managing Director of KENDRIS UK. Please, David.
Thank you, Sarah. Welcome, everybody. My name is David Knight. I head up the UK office. I'm the in-house UK tax expert for KENDRIS. I've been working with KENDRIS for 13 years now. First of all, a small apology for the quite scary photograph. I think perhaps the phrase "a face more fit for radio" would be kind of appropriate there. I'm presenting a rather downcast UK side of the equation today, but this event is more about the relative advantages of Cyprus over the UK rather than the UK itself. I suspect that most of you listening will have a very good grasp of the UK res non dom regime, although I will cover it at a very, very high level. I think I should say that I believe that the UK is really kind of shooting itself in the foot with the changes that that are going to come in very, very shortly. I think this is going to lead to a net loss to the exchequer rather than a £4 billion enhancement, as Labour have been saying for some time. And I think this is all really for ideological and political purposes. I think it's going to hurt the UK and Labour's growth agenda. But anyway, let's move on to the topic in hand. This is a slide of the timeline for the introduction of the new regime, which is literally 2 months away today. The UK non-dom regime has been around for actually over 200 years, you might be surprised to hear, but it's going to go on the 5th of April. The non-dom regime, as probably most of you already know, it enables broadly people not born in the UK but who are resident here to pay UK tax on their UK source income and gains, and any foreign source income and gains that are emitted or brought to the UK. So if they're not brought to the UK, then on the whole, you don't, as a resident, UK resident, you won't pay tax on them. As I say, this will come to an end on the 5th of April. So this is the timeline here is obviously very high level, but in summary, from the 6th of April, in principle, any person already resident in the UK or moving to the UK will be subject to tax on their worldwide income and gains. There are some kind of transitional rules and some softening of the rules. For example, individuals in their first 4 years of UK tax residence will pay no UK tax whatsoever on their foreign income and gains. And this is something that's called the FIG regime. There are also some transitional rules that, for example, the catchily named transitional repatriation facility, that will allow former res non-doms to bring untaxed foreign income and gains into the UK and to pay special, much lower tax rates on those remittances to the UK. I think the rates are going to be 12%, going up to 15% in the third year. That transitional facility will come to an end on the 5th of April 2028. One of the main issues I think that is particularly irking the high net worth community in the UK is the application of 40% inheritance tax to their worldwide assets after 10 years of residence. I think a lot of non-doms are happy, would be happy to pay a little bit more tax, but that 40% on worldwide assets is I think, you know, it's just a pill that they're not prepared to swallow. And I think anecdotal evidence is that the high net worth people are leaving the UK in their droves. I read something that said 10,000 people last year left the UK. The next slide kind of speaks for itself really, and just provides a comparison of the UK and the Cypriot main personal tax rates from a tax point of view. As you can see, Cyprus compares very favourably. So I won't dwell on that for too long. We thought it might be helpful if we showed you an example, a made-up example, but an example nonetheless, just to set out some numbers. This is Jane. She looks very happy in the photograph. I think the photograph clearly was taken before Labour's election victory last year.
She's very cute.
Well, I can't say that, obviously, but you can. So she moved to the UK 5 years ago. She's a res non-dom. So the 5-year point is important because she won't be able to take advantage of the FIG rules, the 4-year rule that I mentioned earlier. And so as of the 5th of April this year, she will fall within this new regime completely. She's resident from year one, 5 years ago when she arrived. UK earnings from employment income, 450,000. She sold a startup in 2022 for 20 million. That was an overseas gain, therefore no UK capital gains tax. She's invested the money wisely in overseas banks, Switzerland and Luxembourg, 20 million assets. And she lives off her employment earnings and investment income from the portfolio. The investment income, which is typical for this type of arrangement, the investment income, the offshore investment income is not remitted to the UK in order to take advantage of the current res non-dom regime. And so again, the next slide, it really speaks for itself. You can see the numbers there up until the 5th of April. The only tax she's paying is in relation to the UK employment source income. After the 5th of April, she'll pay tax on everything. So you can see there's quite a kind of a stark difference in the tax liabilities pre and post 5th April this year, an increase of 565,000 tax in total. And I think as I said earlier, the major aspect to this, I think for high net worths and particularly the ultra high net worths, is that 12 million figure on the 30 million portfolio value. So once she's been resident in the UK for 10 years, and she could be kind of 3 or 4 years away from that, she will be liable to tax, the UK inheritance tax, on her worldwide assets. So from 0 to 12 million. I think that is the one major thing that is really irking the high net worths, and I think meaning that a lot of them have chosen to, unfortunately, to leave the UK. So that's my very brief summing up of the UK res non-dom tax system. And now over to Marios to tell you about the advantages that Cyprus has to offer. Over to you, Marios.
Thank you, David. Good afternoon, everyone. My name is Marios. I work with Sara in Cyprus. I'm a director in private clients accounting services. We set up KENDRIS in Cyprus in 2017, and we have been working closely with international clients since then. I just want to give you some information, not to make it too overbearing, about relocating to Cyprus. There are a couple of options summarized on the screen here as EU and non-EU. So for EU, there is freedom of movement within the EU, so there is no visa requirement to come to Cyprus. As an EU national, however, you do need to have a simple registration with the authorities to legally live and be employed in Cyprus, what we call the yellow slip. It's a very simple process. It means you can move, live, and work in Cyprus. As a non-EU individual, there are various routes. We will talk quite a bit about the investor's permit on the next slide. There is a route which requires employment or self-employment in Cyprus. Again, there are certain things you need to do, certain applications that need to be made, but it's fairly straightforward. In all cases, you will have tag-along rights for family members, which I will explain on a different slide. And we put up there in brackets this Cyprus EU blue card. It has been announced, but we have not heard too much about it. It is an option that can be on the table in the future, but we are waiting to get some more information. Specifically, if you are in the UK and you have applied for a Cyprus residency permit before the 1st of January 2021, you can have access to the EU setup. Otherwise, you have to go fully as a non-EU national. So that is the difference. So what are these immigration permits for investors? So an investor in Cyprus can spend 300,000 euros plus VAT on any one of these routes. One would be to purchase a brand new residential property, so a house or an apartment, which Anastasia will show. There are very, very nice properties in Cyprus at 300,000 plus. But I will leave that surprise to her later. Then you can purchase non-residential property, so an investment property, as in land and buildings, offices, and so on. Again, the value remains the same. It has to be 300,000 euros. Another route, which we will not go into too much detail, is investing in a new or existing Cyprus company. It has to be an operating company. And if you are an operating company, you must have 5 employees. In the case of investment through a Cyprus fund, you will purchase units and the value is still 300,000. We are not going to go